My father started my practice in 1952. I took over in 95. I was a college professor of accounting for more than 15 years. I taught at CUNY, at Brooklyn College. I taught at Baruch. And we can just keep flipping, George. We provide tax services, every type of tax return that you could think of, and some tax returns that you can't think of, we do. I also negotiate with the IRS, New York State, all different kinds of other agencies. People deal with workers' comp, disability, Department of Labor. These are very technical negotiations. Sales tax, we do multi-state. You can go faster, Georgia. We prepare audited financial statements, meaning that we're a peer-reviewed firm. We're more than 30 people. I have specialists working for me, not just here in the city. Joe knows where my office is, down on Exchange Place and Broad Street. We do different types of consulting. We do entity structure, strategic planning, processes in dealing with corporate finance. We support clients with a myriad of vegetable soup type of software. Everybody has a name. I even have my own software that links to other software that we're going to be rolling out for this tax season to other CPAs. We left out one very important company called CloudWalks. That's another company that I run. And CloudWalks basically provides cloud storage and cloud computing for all kinds of companies and other CPA firms. We probably have 1,000 users. Right? My partner, Shivender, some of you have been lucky enough to get to meet him. Many people say that he is the Shiv of Oz. He's just an unbelievable resource, wealth of information. We deal with a lot of foreign companies that want to have a footprint in New York, in the US. So we do that. I'm not in the picture. Go ahead. That's me.
There you are.
Okay. And so we're dealing with all those kind of people. We're going to talk about the Trump spire, right? Everybody loves Trump. We're going to talk, and in the job cuts and the Tax Act that we're going to see, it's really the other way around, Arthur. Go ahead, real estate ownership, and of course, we do tax therapy, thanks to Dr. Sperling. And there he is with the rest of his fan club. Some of you can't see who those people are. You don't really want to know. His second term promises to be just, Trump too. He loves it. And I've met him a couple of times. He's a great guy. So here we go. We're gonna look at. Well, he did lower some of the taxes for some of you, and he raised them for others. He's gonna tariff everybody. No, he's not. Potential impact. There's gonna be all kinds of issues that he's gonna try to create and fights he's gonna get into, so he could make nice to people afterwards. Aaron, go ahead. And if it's for me, just tell them I'm not in. Individual income tax, the rates are going to remain the same. They're going to try to reduce them a little bit. I don't know how they're going to do that. The whole tips thing is totally ridiculous. People have to pay tax on the money that they earn. Tips is money that you earn unless it's in cash. Cash makes no enemies. Social Security, the new limit is 176. Right? So if you're earning on a W-2 or if you're a solopreneur and you make $176,000, you have to pay Social Security tax up to that amount, and then Medicare. We don't have to get into that. Child tax credit. If you're in that threshold between $200,000 and $400,000, it gets phased out. Salt, right? Dr. Kempf tells me you're not putting a lot of salt on your stuff. Salt is not that kind of salt. It's state and local tax, and it's capped. So if you're in the game, Jay, and you own a home because Aaron or Jeff or any of the other real estate brokers, Scott, where's Scott hiding? Okay, he had to run. Too bad. He got a shout out. So if you're if you're in the game and you own a home or an apartment or a piece of property that you live in, you get to deduct your mortgage interest. I usually tell people until you have that piece of property, you can't really itemize on your tax return. You're stuck with the standard deduction. But the standard deduction may not be enough for you, and you get to deduct your mortgage interest. As such, you're capped at $10,000. If you're Cliffy and you have the farm up in Westchester and you have rolling acres and you're paying $30,000 in real estate tax, you could still only take 10. If you're working here in New York and you're paying New York City income tax, you can only take up to that $10,000, which includes your real estate tax and your personal tax. Very, very big topic now. It's not too late. I'm talking now because you still have a couple of weeks to set up a SEP. If you're a solopreneur, if you're self-employed, or a 401k, we can do it for you. And you can deduct the money that you put aside for your retirement and not pay any tax on it. You could also have an HSA. We said hello to Ross. Ross can help you with health insurance. There's two kinds of IRAs. There's a regular IRA, there's a Roth IRA. The regular IRA is the one I love because I say, don't tax me now. I may not live long enough for you to tax me later. So I want to have a deduction now. So I can deduct, because I'm under 50, only $7,000 on my IRA. For those of you older people, like Phil Hamilton, he can deduct $8,000, right? Because he's over 50, he can do that. If you don't have a 529 plan for your child, your grandchild, or your niece or nephew, or anybody that you know that may want to go to college someday, you're leaving $5,000 to be taxed on by New York State, right? If you're married, you can make that contribution 10. You could donate, you could contribute more, but you can only deduct up to that $10,000. You have 5 kids, $10,000. 20 kids, $10,000. But that's a bonus. If you live in New York City, the tax alone is about more than 10%. So I just gave everybody $1,000. So put your kid on payroll. Everybody asks me this question, right? If you have a child, that I like to say 14, because people then, the wife and the husband, they start complaining. Oh, how could the kid be working for me, right? Oh, the kid is too young. He can't be working for me. He's 14 years old. Georgia's been on the payroll longer than that because I was able to deduct $12,000 that I was able to not really give her. She's my child. I'm going to take that money and I'm going to make a 529 plan for her. And if she's old enough with that earned income, I can also contribute to an IRA for her. So unlike her sister, Lily, who I contribute more for because I can control her better than Georgia, I can even give more money. I can even put more money away for her to use in college, right? College is a big money pit. It's $100,000 a year. Right, Arthur? It's $100,000 a year. Capital losses, capital gains, that's why Sale is here. You want to be able to look at your investment portfolio right now. If you have some dead dogs, get rid of them, sell them, right? If the stock isn't trading, tell me, hey, I bought International Cats last year. I paid $10 a share. It isn't even trading anymore. They went out of business. I can't find those guys. They were in a boiler room in Chicago. They're gone. We can deduct that $10 for you and offset it against any capital gains. We can also deduct $3,000 in addition to that if we have the losses. Can't make up the losses, but if we have them, we can do that. Crypto, Bitcoin, Georgia put that in because she loves Bitcoin and crypto. $100,000 the other day, Bitcoin hit a big deal, right? So that means if somebody was crazy enough to buy $100,000 and it goes up $1,000 today, they took a chance with $100,000. Don't do it. Call Sale, call Darryl. Go. Corporate taxation. There are all these different proposals, right? We're going to talk for a minute until Jay has, a heart attack. 15%, 20%, those are the corporate rates. Very different when I'm talking corporate rate. I'm talking Schedule C. I'm talking about S Corp because everybody and their grandmother tells you, oh, You have to be an S Corp. No, you don't have to be an S Corp. You could be a Schedule C attached to your personal income tax return. I'll help you, right, to make that decision. There are some people where that's a benefit, and there are other people where that S corporation is a much better idea, right? Qualified small business stock, that was something I wanted to talk to Joe about. That's stock that you can buy in a company that's a startup and you get it for free. What a deal. Go ahead. Here we go. Here's my chart. For those of you who have your cameras ready, go ahead, take the picture. Here you go, right? Everybody, I'm going to move to this side. Everybody loves this stuff, right? I have profit $150,000, right? If I'm a Schedule C, I have no payroll. If I am an S Corp, I have to have some reasonable payroll. How much does that payroll have to be? Whatever I tell you is reasonable. In some cases, reasonable is $35,000. In some cases, it's $60,000. In other cases, I want you to max out your Social Security. So there are all different kinds of reasons why this number might go up. But that $60,000 reduces the $150,000. So if you look over here, it comes down. I'm going to pay sometimes less tax by being an S Corp. And sometimes I'm going to pay more tax. Plus the fact I'm also going to be subject, as Jay loves New York City. I begged him. I said, stay in Roslyn. You'll be in Nassau County. There's no New York City tax. Right, Arthur? No New York City tax. I live in Westchester. I live in Nassau. I live in New Jersey. Where is... There he is, Tommy. Okay, good. You live in New Jersey. There's no New York City. Now, if I'm a Schedule C, I'm subject to this unincorporated business tax. And if I'm an S Corp, I'm subject to this New York City corporation tax. Now, depending upon how much I earn, that number can be significant. So what if I live in New York City? Very important. What if my business is in New York City? Very important. International tax, we know he's going to do stuff like that. You know, we're in Paris, right? Everybody, this is right. My favorite show, Emily in Paris. Go ahead, Rachel. It's my favorite show. Other tax policy considerations, they have some. The IRS, he hates the IRS, right? He hates anybody that came after him. The IRS came after him. Frankly speaking, the IRS isn't as onerous as New York State and New York City when it comes to trying to collect tax. New York State, you owe more than $10,000, and guess what? They lift your driver's license, and Phil can't get it back for you. I can, but Phil can't. But I can. So you don't want to owe New York State and New York City more than 10 grand. They'll take your driver's license. There are other considerations, right? Maybe you want to buy that electric car. You saw the new Tesla truck. Isn't it beautiful? And you could go and have one and put that in your, I don't know how you fit it in your garage, but you could get it. Go ahead. He may, but we don't know because now he's in bed with Elon, right? So he's in bed, and Elon is sitting there tugging on his, he says, listen, we're going to sell a lot of these cars, all made by computer, right? Robots. We don't have to employ anybody. Everybody can hang out on the beach and drive their Tesla to the beach, because that's all that people will do. Go ahead. Go ahead, we need that. So, go back for 1 second. He's got a question. Pardon me?
What was that?
Oh, the estate tax. There you go. See, speak to Brian Zimmett. When it comes to planning for your demise, which I'm not doing anytime now or in the future, always speak to Brian. He'll help you with a will. Some people come and they say, I have a will. I said, but you need a trust also. Oh, no, I don't need a trust, because many people are experts. I tell them, no, speak to Brian, because Brian always told me, where there's a will, there's a relative. So he's increased that exclusion. Why? He has 5 kids. He wants to give them each $14 million or $13 million. And there are many other people who are rich guys, and they want to be able to give their kids money so that those kids never have to work again. Georgia, sorry. Okay, go to the next thing. So the next thing is, if you take a picture of this QR code, you'll get some more information. You get a little questionnaire. And now Jay loves it when I do this. Anybody have a question? No one has a question. Everybody knows more about tax than I do. That's great.
Do we get free Bitcoin if we scan that?
Yes, you get a free Bitcoin. Yes, sir.
You You had mentioned the beneficial owner information.
Yes. Oh, very interesting. Okay, I'll jump that. So, BOI, beneficial owner information. Yes, the other day, some hick in Texas said, oh, you don't have to do it. I'm telling everybody, do the beneficial owner information. If you own an LLC or an S Corp, you have to disclose. You don't have anything to hide. The only people that don't want to provide the beneficial owner information, Chris, are people that have something to hide. No one here has anything to hide. You give them the information, because what's going to happen is it's going to get overturned, and then there's going to be a mad rush for people to provide this information. I have hundreds and hundreds of clients with businesses that need to do this. That's a great question. The main crux and the main focus of my story is, really, I'm in New York City. Should I be a Schedule C and should I be an S Corp? S Corp requires more compliance. You have to have payroll. That means you have to hire me, Darth Vader, to do your payroll, or ADP or paychecks, which are even worse than me. You have to be able to be running your company like a real business, right? One of my rules, Jay knows, if it's not a real business, then you're not in business, and you're a pachka. Yeah. So we don't want you to do that. So if anybody has any questions, feel free to reach out to me. Whatever you tell me, I'll keep a secret, and I'll help you keep your goal.